Thanks, Chris. And as usual, we're now joined by our money man, Scott Phillips, Chief Investment Officer from Motley. Scott, good evening. Firstly, house prices have risen, especially in Sydney. Now, APRA is cracking down on lenders. Will this price people out of the market?
Tomo, good evening. That's a really good question. It's an important question too. APRA, of course, is the banking regulator, and it is trying really hard, at least all of a sudden, to make sure house price increases don't continue at the same rate as they have in the past. And it's doing so by basically requiring lenders, that is the banks, to say, well, OK, we want to qualify you for that loan based on an even higher interest rate. Now, what that does is it reduces your ability to repay every month, at least theoretically. And so, yeah, it should actually put a lid on house prices to some degree. The problem with that, of course, is it goes all the way down the market. Some people will be able to afford simply a less expensive house than in the past, but some people will be priced out of the market, unfortunately. OK,
and who's going to be protected the most, the buyer or the banks?
That's a really good question. Hopefully both in APRA's view, and also the economy and the broader system. The idea here is basically, firstly, we don't want house price growth to continue to get away from both first home buyers and banks, put undue stress on the financial system. And both APRA and the RBA are looking down the pike to some interest rate increases here at some point. When those happen, they want to make sure the buyers and the banks are protected from what otherwise might be extra impost on average weekly earnings.
Scott, people will have noticed this a day after the RBA left the cash rate on hold. Across the Tasman, the Reserve Bank of New Zealand has lifted its cash rate to 0.5%. So is that a signal, do you think, of things to come here?
I think it is. I think, well, in the strange world that we're in, normally inflation's a bad thing, right? None of us want to pay more for our groceries or our petrol or our power bills. But the RBA is desperately trying to get some inflation back into the system to pretty much kind of jolt the economy back to life. In New Zealand, they're seeing inflation that might actually top 4%, if you can believe that. And so the RBNZ is trying to get ahead of that by putting rates up now to basically take some steam out of that economy before it hits what they call capacity constraints. In other words, too much money chasing too few goods, which is what causes prices to rise. Now, the RBA would love to have that problem. They said only yesterday, as you mentioned, they don't see that happening here probably until 2024. So it is a good problem at the moment for the RBNZ to have, and one the RBA would dearly like to have here at home. OK,
finally, how's Wall Street looking?
I wish I had better news for you, Tomo. The only good sign here is that yesterday the US futures were down. Their market closed up, but our market closed down. So maybe it's the reverse tonight. Unfortunately, in early pre-futures trading, they're looking at a decline of almost 1 percentage point. So hopefully some of that's priced into our market already, and hopefully it won't be so bad here tomorrow.
Fingers crossed. Scott Phillips, thank you.
Thanks, Tomo.